Hi there, and welcome to another instalment of the Net Worth Network. My name is Toby Street, and I'm here once again with Jeremy Harbour.
Hello.
And today we're going to be talking about the private banking world. And this is a subject that not that many people really know about, especially not people who are looking to acquire wealth. And they certainly don't understand the benefits, the enormity and the scale of the benefits. When you start to reach certain kind of levels in terms of your own personal wealth, what sort of things become available to you, and really why it's a bit of a cliche, but why the rich get richer, and how you can actually kind of position yourself as one of those people. So Jeremy, where should we start with this? What's the kind of next level?
I guess start with my kind of introduction to it, I suppose, which is as soon as I got to a certain level, I was invited to become a customer of Coutts, and that opened up a couple of doors. But it was only really when I got to a kind of a next level, if you like, and I started to actually shop around a bit amongst the private wealth banks. And by the private wealth banks, I mean people like Standard Chartered, Coutts Private Wealth, Barclays Capital, Barclays Wealth, ABN AMRO Private Wealth, these kind of organisations. And typically they have starting investment levels of depositing between £1 million to about £3 million. ABN AMRO Private Wealth is minimum $3 million to open an account. And I always just thought maybe it's a concierge service and a flashy card you can wave about. In fact, my private bank, I can't do online banking, I don't get a credit card, I don't get a Visa card, I get nothing. So when I want to transfer money, I have to send it to another account with another bank that I can do online banking and things like that from. So it's nothing to do with the current account banking, if you like. It's purely investment banking. And the advantages are basically you're allowed to invest in a whole range of sophisticated products. You're also able to leverage those products in a very different way than if you were a normal retail banking customer. So I suppose to give you some specific examples, you can buy investment grade bonds, which are bonds that have an investment grade rating from one of the big providers like Moody's or Fitch or something like that. You can invest in investment grade bonds that will have a yield to maturity. In other words, they're going to give you an income until they mature, at which point you get the whole lump sum back again. They'll have a yield to maturity interest rate of maybe 5 or 6%, something like that. Now, on its own, that doesn't sound terribly exciting. But remember, bonds move very little in terms of price, particularly short-dated ones, so you don't have a lot of volatility in your portfolio. And one of the things that you can do with the private wealth banking is you can borrow money secured against the bond, so you can leverage the bond. In my case, I borrow at 1.25% per year interest, and the bond gives me 5.5%
Just
interest.
For people at home, if you've got a mortgage or anything like that, chances are you're borrowing at 5, 6, maybe even 7% right now. So 1.25% is ridiculously cheap money. Now this kind of counteracts what we were talking about earlier in terms of debt, but this is very, very cleverly leveraged, very, very stable, very, very secure, and investing, again, in something...
So there's a really good example you use there, which is leverage as a mortgage to buy a house. So for example, if you wanted to buy a house, you could get maybe 70% of the value of the house in debt at 4 or 5% interest. So you only have to put in 30%, but you get all of the rental income. So therefore you have a better return on your capital employed. And that's the reason why people use leverage when they do property investment. But here's a different idea. You could buy a corporate bond, which was in a very large property company. Perhaps they build, skyscrapers, Canary Wharf or something like this. So you could own part of the debt that owns that skyscraper. Now bear in mind, a bond is tier 1 debt. So when the world collapses, you're the one that gets paid. In fact, when the banks collapsed, all that bailout money was to make sure bondholders got paid. In fact, in Cyprus, they took people's savings to give to bondholders. So as a bondholder, you're in a pretty strong position.
So as wrong as that kind of sounds, which side would you rather be on?
Yeah, exactly. Would you rather be
you've got to play the system.
The poacher or the gamekeeper, So so these bonds can be incredibly powerful. So you could, instead of buying a house for £100,000 and £70,000 being on a mortgage at 4%, you could buy a company that owns a house, effectively. You can invest in a bond from them that will give you 5 or 6% interest, and you can also leverage 70% of that. In fact, you can normally leverage 75% of an investment grade bond, but you normally leverage a little bit less than that to allow for those small fluctuations, because you get something called a margin call if you end up borrowing too much against them and they move a few points up or down. So if you leverage 70% of the bond, you're only paying 1.25% interest on that leverage. So you benefit much more than you would in putting the same thing into property.
But obviously, you've still got the exposure to the property.
Absolutely, you still have exposure to a property in a particular geography. So you can also, it's very easy and quick. Lots of people say they're property investors. Quite often, when you ask them a couple of questions, you realise they run a property business. They're not really property investors. They run a property business because they have customers who are their tenants. They have, they're producing accounts on a regular basis for their income and expenditure, and they have to fix boilers when they break and this kind of stuff. So doing it this way round, you can really be a property investor. You put 200,000 into real estate-backed bonds, and you end up owning £800,000 worth of real estate bonds, and the interest you pay on the leverage is only 1.25% instead of 3, 4, or 5% on a mortgage. So there's arguments both ways. I'm not saying you should have one and not the other, because I think in a diversified portfolio you should have everything. Obviously, you don't get the potential capital appreciation with bonds that you get with property, but then also the capital appreciation hasn't been that reliable over the course of history. There have been several property crashes where you've had 30-40% corrections, and a 30-40% correction in the bond market is almost unheard of. So for a start, this is just one aspect of private wealth banking, that you get to borrow money at this ridiculously low rate. Another one is you get these bonds which you can't buy as a private individual.
And on that leverage then, what are you able to do with the money that you borrow?
So the example I just gave was actually buying more bonds. So you could put £200,000 in and get £800,000 worth of bonds. Well, that probably gives you all of the income you need to live a really healthy lifestyle. You're getting kind of 20% return at that point after paying all the interest. But if you wanted to have a bit more diversification, you could use that money for anything. So, for example, you could invest in a basket of bonds. You could then borrow a bit of money at 1.25% and do maybe real estate-backed loans. So, for example, lots of people are looking for bridging finance to buy a property, and then they're going to remortgage it and pay you back. That bridging finance is often 1 or 2% per month. So bearing in mind you have the security of their property if they default, so you get all the property and the equity, you could quite easily do private loans effectively to people to make 1 or 2% a month on money that you're borrowing at 1.25% a year.
Obviously, you need to go through a regulated vehicle, because as an individual you're not allowed to gain a private guarantor over someone's asset. But there are plenty of companies out there that can allow you to gain a 12, 14% return on your money per annum by doing exactly that.
Yeah. So there's lots of things you can do with the ability to draw that money down. Yeah. So you build up your portfolio, and you always know that if you want to lay your hands on some cash, and this is quite useful, particularly if you are investing all of your income into your portfolio. You keep investing all of your income into your portfolio, safe in the knowledge that if you do need some money in an emergency, because a great opportunity comes up or whatever it is, you can access it at a very low rate and pay it back later. So the private wealth area gives you that kind of access. So you can buy these bonds which normally people aren't allowed to buy. Obviously, everyone can invest in stocks. You get full-time analysts that are working for you. So if you are specific about what you want, and I'm always looking for highly capitalized, very big businesses. I'm always looking for yield over about 5%. I'm always looking for something called an AR of more than 75%. The AR is the kind of credit rating that the bank gives it in terms of its the leverage that you could take against it in the future if you wanted. So that's a great way of protecting yourself if you do want to draw cash down against various things. And then I quite often look at hedging across different currencies, different countries, and things like that. But so you've got this team that are working for you doing that. They're also giving you lots of information. You can play around with currencies. So a lot of my investments are in US dollars, which are doing really well at the moment, but I don't live anywhere where I spend US dollars. So you can play around with the differences in currencies. Obviously, there's risk associated with that, so it depends on your appetite to risk. But really, the flexibility around the products you can invest in and what you can borrow is the way that you can become a lot more wealthy. You know, people always used to say, you know, making your second million is a lot easier than making your first one. And that's kind of true, because as soon as you get out of retail banking, it stops becoming like an extra tax on everything you do, and it starts to really add, the private wealth situation starts to add a lot to what you do.
I think something else really important there to note is the kind of risk that you're removing from your own shoulders. As soon as if you yourself are trying to go out and invest and earn an 8 or 10% return, for example, if you then remove the risk of you personally doing that, and potentially the time that it takes for you to do that as well, and the added resources that you might have in order to gain that return, etc., you know, with a property portfolio that you manage yourself, for example, you're just putting all of that on a massive entity that has a huge infrastructure in place to deliver you a, say, 6% return really very, very easily. You don't even have to think about it. So really you're reducing risk and adding security as well. Plus, obviously, the ability to leverage very cheaply is invaluable. Really.
Yeah. So it's really important, I think, to get on that private wealth banking ladder as quickly as possible. I do know people that, since I've recommended this, have actually been able to kind of blag their way in a little bit, because technically, like I say, ABN AMRO Private Wealth are supposed to deposit $3 million straight down as a deposit. I've managed to get one business partner of mine in for $1 million, and I think another one of my business partners is about to get in for £500,000, which is about $750,000. But that's on the basis of kind of proving that they've got other assets or other things that they're involved in that just aren't liquid enough to deposit with the bank today. And of course, they've also come with a bit of a recommendation from me. I would highly recommend getting your best blagging shoes on and trying to get into one of those relationships early, so that you can really start to accelerate the income into assets stream and build your income significantly.
Fantastic. Well, guys, thanks very much for listening. I think that was probably one of the most valuable videos we've had so far in terms of the kind of scale and potential when you start acquiring, protecting, and growing, you know, wealth, proper wealth. If this video has been interesting to you and you found it valuable, then if you are not yet on our newsletter, then please do put your details in below. We release a video roughly once every week, and they're just like this, pretty short, snappy, really, really punchy information. I think if you're on the path to, you know, huge success and growth of wealth, it's a must-have, really. We will speak to you soon. Thank you.
Thank you.